Well, good morning, everybody. I'd like to welcome you all to the Daily Energy Markets Forum on Tuesday, October the 19th. I'm delighted to be joined by Peter McGuire, CEO of XM Australia, David Rundell, longest-serving US diplomat in Saudi Arabia and also involved in the shale industry in Texas. And for the first time on our program, a special welcome to Mr. Henning Bloistein, Director of Energy, Climate and Resources at the Eurasia Group. Gentlemen, thank you very much for joining us.
Good morning.
Peter, good morning. I'll go to you first. We've seen Brent cross $85 in the last few days, sort of oil prices confidently holding in this, I suppose, early to mid 80s range for the last few weeks. But we are seeing also headlines that hedge funds are beginning to cut their long positions. So where are we going with this market?
Well, I tell you what, Dyala, thanks for welcoming me on the show. What a great question, because who knows? I think it took everyone by surprise, the huge uptick that we saw from really those early 60s. It's put $20 on over the last couple of months. And that momentum has just been one-way traffic. So where does it go from here? US dollar index sitting at about 93.65. It's come off a little bit. Possibly, I think there's further up run. Maybe a $90 handle is achievable. I'm not going to put my hand out there, but it's just been that strong for that long that it's pretty hard to stand in the way of a bull market. And at the moment, most traders are still continuing that long view unless we see something dramatic to derail. And at the moment, it just seems to be a strong push. Base metals, have a look what's happened with copper, have a look some of those zinc, aluminium, tin, and of course, what's going on as far as global industrial demand.
Okay, well, let's talk about global industrial demand. Just back at you there, and China, which is obviously, one of the largest consumers of that energy demand. And we've seen, big banks come out in the last 24 hours, downgrading growth forecasts again for China. So a lot of negativity on its growth forecast, let's say, in recent days and weeks. So why is that not impacting where the prices are going, or would it?
I don't think it's actually worked through the market. And I think that really we could principally look at the Evergrande story as one to draw a reference point, and the magnitude of the Chinese property market valued at about $62 trillion. And there's about 11 trillion of inventory there that needs to look for a new buyer. So there's a great concern across the property sector. That, as I said, I don't think that's worked through the market yet. What happens come November, December, or January as far as some of those bond payments, and whether the government can do one of three things. First off, naturally come to the rescue. Secondly, if it doesn't come to the rescue, then we look at a bankruptcy, and that's just a normal course of events in any business cycle, a washout, a clean out. Or thirdly, look at possibly a revaluation as far as their debt, or they've cleaned their balance sheet and maybe do something exotic like with the price of gold or something. So that's where we're looking at the moment. It's an uncharted territory, and we've just got to see where China plays, both domestically and of course for those international financial institutions.
Peter, back to you and back to the markets. Let's talk a little bit about gas. We've seen that, if I'm correct, in saying come off a little bit from the recent sort of highs that we've seen marginally. But do you think that's the start of a new trend, and why is that happening?
Well, markets, as we know, get exhausted to the upside because they have such a rapid move up, or they get oversold. So that's traditional. And they bounce from, you've got technical traders, you've got naturally just straight out fundamental traders, and traders that are trading on seasonality, and then the combination of it all. So when we think about what's happened, and I'm just looking at the price and that bounce, it's not unusual to see those corrections. And what we experienced over the last week or so has just been, it was a blowout to the upside. We had a pullback, and then all of a sudden, about a 14, 15% move. And that, I think, was some profit taking in there. Not unusual to see markets correct in the short term. And I just put it down to possibly bullishness that was absorbed by the markets. Traders took positions and they sold out, and it's as simple as that. There was profits to be made, and that's what traders do for a living.
Okay, are we seeing any relief coming from this global supply crunch on goods, on labor, etc.? We're seeing obviously that impacting and propelling inflation, the inflation argument forward much quicker than expected. Where are we going with that, Peter? I mean, is that going to subside anytime soon, or is that just getting worse?
Well, I think it's getting worse. And the inflation story, I think most people have been talking about it now for at least 3 to 6 months. So it's really starting to ratchet up. And we're seeing some of those numbers that are being presented, you know, UK, New Zealand, the likes have got numbers coming out this week. I made some notes, I think Canada and Japan. So there's the story. It just seems to be galloping away. We're looking at a tightening cycle. New Zealand could raise rates again in November for the second time within 2 months. So that whole cycle and that whole trying to pull back inflation, the issues that we're seeing in many mature markets is that we haven't got enough workers. So that transient worker that comes to Australia and works in certain industries, there aren't the people because the doors are shut. And this is impacting, we're seeing similar in the UK, similar in the US to some extent. And these are just the workings of any market. So the inflation story, it's been baked in with higher transportation costs. You look at the Baltic Dry Freight Index, you look at energies, you look at food, base metals, everything's just been ratcheted up and the consumer is feeling it. And I suppose it's time for everyone to put their hand out and get a pay rise.
Peter, I'll go to you just to look at that survey question, looking back to monetary policy, US Fed. Does it need to redefine its employment and inflation targets so it can be allowed to sort of have the excuse, if you like, to be more hawkish? Yes or no? Peter, I'll just ask you directly how you would vote for that. Do you think that there's the Fed stalling, or does it need to redefine so it has a reason to be able to act?
I would say yes, and I think that the inflation story is they're behind the curve, and I think they've got to play catch up. And I think they've got to play catch up quickly due to taper, due to what's going on as far as global demand for all commodities. We've got to be conscious as far as the rate hiking cycle and what's going on with the inflation galloping away, and the chances that 22 could be a soft year for growth. Are we going to experience a softer year? And I think worrying most people is that stagflation story. It seems to be across here somewhere that's gaining a little bit of momentum. So at the moment, I just have to say yes. And most traders, I think, would be across that sort of mindset.
Okay, Peter, I'll go to you to wrap up for us today with a sort of a look ahead. Let's just quickly look at that poll result, quite close, 53-47. So I guess that, our audience is a bit split on that. Peter, not the week ahead, but let's look at the sort of through to the end of the fourth quarter. $100 oil?
I don't think so. I think 90 will pull it up, but it's a very dangerous game to try and guesstimate where it'll be by 31 December as a high point. So is it achievable? Can it happen? Of course it can happen. $15 over that 2 and a bit month time frame. I think it'll be closer to 80 than 90, but if it hits 90, I won't be surprised.
And I mean, on the other commodities front, metals, etc., which we've seen, and lumber and all the other building materials, do you see those sort of cooling down a little bit, or are they going to continue to be carried, pushed and carried by the inflation that we're seeing?
I think the inflation, I think that there's further upside, building on what Henning mentioned. I think there's further upside for the base metals, I think foods as well. And yeah, there's copper, keep an eye on it. It's probably an $11,000 trade. It may even hit higher than that. So I think that will be the tide that takes crude up with it will be those base metals. And yeah, the next 2 months I think could be an exciting time for traders.
And I mean, the fact that crude has been viewed as cheap, you know, compared to other commodities, is that gonna, how much is that gonna play in pushing it any further?
If US dollar came to 91, then that's going to add a fair bit of horsepower to the price of crude. It's currently at about 93.5. It's the US dollar index, so keep that in mind. The overall, I think, momentum is pushing the markets higher, but I'm not sure how much pain is going to be felt from the consumer to really settle crude down, and that's why I think $80 is be pretty much that benchmark price by the end of the year.
Henning Goistein, Peter McGuire, and David Rundell, thank you very much, gentlemen, for joining us this morning. Have a great remainder of the week, and we shall see you all soon. Thank you very much to our viewers. Thank you.
Thanks for the invitation.